Hello, my name is Simon Mackey and we are going to make a quick financial analysis of Berkshire Hathaway. We will take a closer look at liquidity and profitability ratios across time to compare the company's current situations with 2017's.
Berkshire Hathaway is a 180-year-old holding company. Its head office is in Omaha, Nebraska. The current chairman and CEO of the company is Warren Buffett, one of the most influential men in today's America. In 2018, Berkshire Hathaway had about 389,000 employees, and its market capitalization is evaluated at $517 billion. This video will mainly focus on Hathaway's income in 2018, which was disastrous compared to previous year's results. We will use ratios to understand where the anomalies come from. We will use intra-company standards for this analysis. As such, let's compare Hathaway's 2017 and 18 results. By looking at the graph, we can observe a small bump in revenue of about 3%. However, this is overshadowed by the fact that the cost of revenue is up by more than 10%. Consequently, Hathaway's gross profit is down by about 6%. After considering other revenues, we can see a big difference between 2017 and 18's net income, the former being much higher. We can conclude that expenses grew at a faster rate than revenues during 2018. This is obvious if we analyze profitability ratios such as the net profit margin. Since Hathaway's net profit margin for 2018 is only about 1.6% compared to 17's 18.7%, investors will be less inclined to buy shares from the company since financial rewards will be less interesting. Let's compare Hathaway's current ratio with older results and analyze if the company has a liquidity problem or not. By looking at the spreadsheet, we can see the value of current assets hasn't varied very much between the 2 years. However, current liabilities have increased by 17.6%, which means the company has more short-term obligations than last year, but doesn't necessarily have more liquidities to pay with. This greatly affects the current ratio, since the increase in current liabilities lowers the ratio. Nonetheless, with the current ratio of 3.16, Hathaway still has a lot of room to work with and has no liquidity problem. Even though the ratio is much lower than the previous year, it is still way above the critical value of 1.
In conclusion, Hathaway's financial performance in 2018 was worse than its previous year, mainly because the net income has dramatically decreased. Despite a difficult year, Berkshire Hathaway certainly has the means to bump back up in 2019. If you have any questions concerning this analysis, feel free to ask them. Thanks for your time, and I'll see you in the next one.